got to remember when you've got 50,000 sitting in offset, when you go to the ATM and you see your available funds, you see $50,000 available. And sometimes in our DNA, in our molecular structure of our brains, we, I don't know, I'm getting a bit technical on the whole serotonin and dopamine and all that stuff, but people feel comfortable. And there are certain people, and I'm not saying I'm not one of them, that might chew up a lot of that 50K.
Hello and welcome to the Help My Wealth podcast, Money Rules or Money Rules. Here at Help My Wealth, we are all about empowering financial success in our community of listeners. We hope you find today's topic both informative and helpful.
Hi, welcome to the Help My Wealth podcast, Money Rules or Money Rules. My name is Hamish Ferguson, and today, David Lennox from our Sydney office and I will be discussing, in a shorter format, 5 reasons why you might pick what we call a basic variable loan over a fully featured loan with an offset account. Hope you enjoy. Hey Dave, thanks for your time. So I've asked you to join me today because we'd love to talk about some reasons why clients might pick a basic loan as opposed to an offset account. So mate, 23 years doing this, so tell us your thoughts around this.
Well, you've stripped 2 years. We've started our 25th, but we won't go into that. But thanks for that. But yeah, look, when we're dealing with a lender, most banks have different types of products. I'll just start on that. So you've got obviously variable rates, you've got fixed rates. Within variable rates, you have the full featured products or maybe the basic products, the basic variable product. So I just thought we'd make that distinction. And when we talk about basic loans, so most lenders will have a separation between a full featured variable product and a basic less featured variable product. And so when I think of a basic loan, when I'm talking to people, I guess the way I would define a basic loan, generally a fairly low, stable variable rate, right? So it might look a bit lower to other product rates on the market. It will have a redraw account. It'll have less fees, so lower rate, less fees. But when things have lower rates and less fees, you probably get a few less features. And the main feature that tends to be absent when we talk about basic loans is an offset account. So you'll still generally have redraw and the ability to access redraw. You might have a fee related to redraw. Sometimes you do, sometimes you don't. But it's the absence of the offset account. So full featured, maybe a slightly higher rate or an equal rate. More fees, generally an annual fee with a full featured. Basic, lower rate, less fees, but you can do less, and generally you don't have an offset account. Is that fair to say on your side?
Yeah, and the way you've explained that, I guess it probably does make sense just to maybe in a minute or two explain in your words what an offset account actually gives the benefit of, if that makes sense.
Sure. So an offset account, it's a normal transaction account. So most of us have a transaction account where our salaries or something go in and our expenses, which might pay off a credit card or whatever, come out of. So our transaction account. So an offset account tends to be just a normal transaction account, but the balance of that transaction account goes towards reducing the way the bank calculates the interest. So if you've got a loan amount of 200,000 and 20,000 sitting in your transaction offset account, then they're only going to calculate interest on the 180,000. Okay, so that's a huge thing to think about. So in terms of where we're going to go with this conversation and when I would recommend basic loan products, a lot of it will have to do with whether or not we think an offset account would be the most appropriate for a client.
Okay. And if I can take that one step further, would I be right in saying that if you've got an offset account and you're using it, I guess to its full effect, it should actually have 2 benefits to the client, won't it? Or at least 2, from my perspective, you might have more. One is it will create redraw in the loan for you because the bank will still expect the same repayment. So your redraw will build quicker.
That's true.
and your interest that you're actually paying on the loan each month will reduce as well. Is that a fair call, which essentially means you pay off the loan quicker?
It does. It totally has that long-term effect. If you're successful in managing having funds in that offset account, it has a real compounding effect. So as you say, with a principal and interest loan, even though you might have money in your offset account, your minimum monthly repayment stays the same, and builds up that redraw and has a huge impact on the speed at which you pay a loan off in terms of building redraw and all those sorts of things. So look, the way I sum it up if I'm talking to a client is if you've got money sitting in an offset account, it is like earning your home loan interest rate after tax. So because you're paying less interest, like if you've got $50,000, you can buy shares, you can go and buy a car, you can put it in you can put it in a term deposit, right? And the interest that you generate off that goes on your tax return and you get taxed on that, right? Depending on your marginal tax rate. We're getting a little bit complicated now. But if that $50,000 goes towards me paying interest on $50,000 less, it's like earning my home loan rate. So if your home loan rate is 6%, it is like earning 6% after tax. So in terms of what to do with your cash, that's the quick and easy way to think about that. Now, you're in planning and advise people a little bit more on these things, but is that a fair way to look at it?
Absolutely. I mean, apart from the fact that, you've probably lost me about 3 potential leads in that just that 2 or 3 minutes. So thanks for that. But
that's right.
But absolutely, it's that risk-free return. And when you've got a home loan, it's pretty hard to beat that, especially when, most of us are paying, 6.5% interest rates in today's market.
That's right. So when we spent those 2 or 3 years where people had rates in the 2%, right? People could go and buy a share in BHP or CBA and earn more, possibly, right? But now, 6% after tax, guaranteed. It's now getting fairly powerful, and for clients with surplus cash, certainly the offset account discussion is powerful, and it generally wins over the benefits of where we're going to talk about the basic loan. So if people have surplus funds, but we will get into that as we talk about it more.
No, so everybody wants an offset account at this point in time. So now what we're going to do, if that's all right, is talk a little bit about, some of the reasons why an offset account might seem good, but it might not necessarily be appropriate for you, comparing it to a basic variable rate. Is that okay with you?
100%. Yep.
All right. So reason number one, what would you say is one of the things that would come up in a conversation?
Well, we would have plenty of customers that might have had their home loan 15, 20 years, right? And they've paid it down from 500 grand down to 150 grand or something like that. So they've got a fairly low loan balance, and they're not necessarily thinking about buying a lot more investment property in their lives. They might be 55 or 60, or not that that's old. We're getting towards that age ourselves. But yes, if you have got a low loan balance and you're really just looking at having that loan in place and paying, your main goal in life is to pay that loan down, then the simplicity of having the basic loan really does win. So the size of the loan definitely counts, and because saving interest, right, interest being calculated on a low balance, the impact of the offset lessens a great deal. So size of the loan balance for the client, and the fact that they're not intending to increase their overall lending footprint by buying more property. So their lending footprint is already small and is only going to get smaller. The conversation, I think, opens up about a basic loan with a low rate, low fees. Just keep getting stuck into it. That comes into play. So size of the loan, that's definitely probably number one on our list, I would say, in terms of when we consider things.
Buying sort of loans sub 200, that's where, if you're in an offset account, it might be worthwhile coming back to your broker or to us to investigate what's right for you at that point in time. Would that be a reasonable sort of number?
Yeah, yes, sub 200. That's a very good place to start. Yep.
Yeah. Okay.
Yeah, there will be the odd circumstance, depending on the client's income or combined income levels, right? That may shift slightly, but yes, 200 is a really good place to start on that.
And we're talking about 200 of aggregate debt, aren't we? Like, in other words, if somebody's got still $500,000 on an investment property, but their home loan's down to 150, that might be a different conversation altogether. Fair comment?
Right. Yep, fair comment.
Okay.
Yep. Yeah, the mix of debt does come into play. Yep.
Yeah. Okay. So reason number two, what would be the next thought that comes to mind when it comes to thinking about these two things?
Well, many customers, and I'm not going to say that I'm not in this boat, but certainly with the cost of living, I mean, as I said, the reason to not have a basic loan is to have an offset account, right? So generally, we're talking about an offset account being a benefit, and it's certainly a benefit for clients who are going to have surplus cash flow. They're coming into money, they get bonuses, they're ahead in their monthly cash flow. But for for many Australians who are, might be cash neutral on a month-to-month basis when you account for everything. So if we're not expecting an offset account to keep a reserve of funds or to be increasing, so people who are not generating $1,000 or $2,000 a month in positive cash flow, so if the offset account isn't necessarily going to build and save that interest, then it's possibly no point paying the higher rate, right? If you're not going to save the interest from having the money in offset, then there's no point in paying the higher rate that might be applicable to the full featured variable loans. So, so if you're not expecting to generate big cash reserves, steer clear of offset accounts and full featured and take the basic lower rate, lower fee loans, 100%.
So it might be good just to give a quick little example there, if that's okay with you, Dave. So if I've got this right, if I've got an offset account that's got, say, an average balance over the course of a month of, say, $3,000 and the interest rate is 6%, then what we're talking about is that the offset account would be giving you a benefit or an approximate benefit of something about the $180 per year mark. Would you agree with that statement? Yeah. Okay.
I would, and possibly the rate you're paying is compared to the basic loan. If you were paying the basic loan, maybe you would save more than $180 a month by having the lower interest rate. So that's where that little comparison. So yes, if you're expecting to rarely have over, and this differs circumstances for different clients, but if you're not expecting to be building and keeping 10 to 15K, honestly, then I'd be thinking about going down that basic loan path, I'd say.
Well, that's great, Dave. Thanks. So tip number 3, or reason number 3 why you might consider a basic loan.
Okay. Again, it comes down to really, it's almost asking this, like when I recommend a basic loan is almost the same question as who would I recommend an offset account to? That's almost the same question for me and with clients, right? So it's another area where an offset account may not be appropriate for clients is they've got high consumer debts. They've built up credit cards and personal loans, and maybe they're cash negative from month to month. So after loan settlement, we might have structured the lending where they might have $50,000 in offset after settlement for whatever reasons. They've decided to borrow a bit of extra funds for certain things. But if their history over the last year or two is that they spend their excess funds, I'm not saying they're being irresponsible, we're all guilty of this, but suddenly they've got $50,000 sitting in an account and they go and buy the car, they go on the holiday, they do things that they might not ordinarily done, because we've got to remember when you've got $50,000 sitting in offset, when you go to the ATM and you see your available funds, you see $50,000 available. And sometimes in our DNA, in our molecular structure of our of our brains, we, I don't know, I'm getting a bit technical on the whole serotonin and dopamine and all that stuff, but people feel comfortable. And there are certain people, and I'm not saying I'm not one of them, that might chew up a lot of that 50K. So you want to see that people are fairly disciplined in their savings and that they can cope with having 50, 60, 70,000 in an offset, and it doesn't impact their consumption habits, so to speak. That's definitely an area where we might be impacted about what we recommend, the basic versus full featured. And there's even certain lenders with certain offset account structures where you can have multiple offsets. So you can have an offset account which is almost hidden from your view, right? So you have your transaction one, the one that you get the ATM machine, and maybe you have less in that offset, and you create other offsets that you don't see as much. And I promise you, psychologically, the hidden money you can't see is very, very tends to not be spent as much. It's harder to get your hands on. So that can be worthwhile. I mean, we call it a parking station. That's why people tend to like term deposits, sort of set and forget. I'm not going to think about it. It's just working for me. A hidden offset is almost the same thing. So we do talk about that with clients sometimes, but certainly if the client has got a history of high consumer debt, being cash negative and all that, and post-settlement, we're going to give them some buffer funds. I tend to steer away from sticking that in offset, because sometimes that can be chewed up fairly quickly. Sorry. Sorry?
You didn't hear that, sorry. I said, I think the opposite of that can be true sometimes as well, which is that we're psychologically less inclined to take money out if it's sitting in redraw on a loan, right? Because we feel like, we're going into more debt, whereas an offset account, it's a bank account. So it sort of feels like it's available money.
Correct.
Okay. All right. That's good. I hope everyone got that one. Tip number 4, or reason number 4.
Well, when people have investment loans, so some people might have, they mightn't have a home loan. Their first property might be an investment, or they've paid off their home loan, they've got an investment loan. We tend to, maybe if it's an investment loan, that can be an area where, we tend not to, with the investment loans, I mean, that's an area where we might steer away from the offset account. Sorry to be confusing, but sometimes the basic loan for investment loans, which are just going to be set and forget, sometimes the basic loan can really come in handy, because if someone has got a home loan and they've got an investment loan, we're really trying to attack the home loan first. So the investment loan, which is set and forget, sometimes we hook them at interest only, which a basic product can be interest only. So we tend to think about that when people are busy trying to attack a home loan and pay that off and maybe offset that one. The investment loan, we sometimes will take the lower rate, set and forget, don't use redraw, don't use offset, and just set and forget it.
And I think as time goes on, because sometimes we see clients initially and then we might not see them for a couple of years. And if we give them an offset account that's attached to the investment loan and the home loan, we can get confused, can't we? Like, we can forget that we're supposed to be using the one against the home rather than the one for the investment, and then the funds start building up the wrong way. So that could be another thing just to bear in mind as well.
Yeah, I think they would be my main reasons. I mean, the ones we've covered so far. If it's an investment, if the client is not going to build up a lot of funds in offset, the size of the loan, anything under 200, all those things. I think that they're probably the main reasons, I would say, in terms of recommending a basic loan or steering away from the offsets.
So whilst the interest rates are high and first home buyers might be struggling a little bit, I feel like you've almost missed the one that you taught me, Dave, for all those years ago, which was, if somebody buys their first home and they'd love it to become an investment property down the track, then I know this is not a reason to go for a basic loan, but there is this question of of what the purpose of the property is down the track. So if it's for a home, my understanding is an offset account could be a great conversation to have. But if you never want to rent this property out, then it might be a soft reason to consider what type of product you want as well, wouldn't it?
100%. So if you've bought your home, it's going to be your home for life. And the likelihood of you wanting to buy any other property, right? You're never going to rent this home out. Definitely that's a circumstance where a set and forget, low, no frills, low fees, and plenty of customers, plenty of Australians are in that bucket. That they just want something simple, always low. They're not continually negotiating with a lender to cut their rate because it's always pretty low throughout the life of the loan. No fees. A lot of us Aussies, we've got an aversion to bank fees, as we should. So yes, just being something that's fee friendly, rate friendly, simple to operate, set and forget, very, very popular.
Yeah, cool. All right, Dave, so I can summarise there. So what I've heard today is, look, if you've got a low-ish balance, something sub 200 grand, and you don't have any investment debt, then that can be a reason to think carefully about whether you want an offset account or not. The second one is if you're the typical person, which is probably most of us, where you run the account with, let's say, sub 5 grand in the account. I think you might have mentioned a little bit higher than that, but if we use that, you're not keeping 20, 30, 40,000 dollars in there, that can be another reason to go, oh, okay, is an offset account the right one? We've talked about discipline, all right, and most of us, can be a little bit undisciplined, let's say, when it comes to thinking about money. And if we've got too much money in there, it might make it easier to spend that money in our mental frame of mind. There's an investment versus owner-occupied sort of question mark that you can throw in there. And then the last one is, and it's probably, again, as the loan debt comes down, that if you're never intending on renting out that property, then that can be a slight consideration as well. Have I missed anything there?
No, that's a very good summary. And just the way I would tail it off is the beauty of a good mortgage broker, good finance people. If your circumstances change in 5 years, we can always shift it. You know what I mean? And that's the other thing. So sometimes for a period of time, something will suit, and then circumstances change. And that's the beauty of what we can do. And that's why we try and keep in touch with our customers once a year, just to see if it's not just about generating more business, but it's also about seeing if their overall long-term objectives are still the same, because these things can change quite quickly. They come into money, something changes, one of the two applicants is out of a job, all sorts of things change. And in having this, basic versus full-featured, once you're in it, that doesn't mean you're in it forever. We can, as brokers, we make these changes for people all the time.
Yeah, absolutely. All right. So hopefully, guys, you got something out of this today. Thanks again, Dave, for your time. And you'll find that our website address and our phone numbers in the comments or in the show notes below. So we'd love to hear from you if you need any help on getting the right loan so that you can whack this home loan down as quickly as possible. Thanks for your time today, Dave.
Great. Thank you. Have a good one.
All right. Bye.